Hello, chart watchers and Decision Point faithful. Welcome to your Daily Five. I'm Erin Swenlin with DecisionPoint.com, here to give you my five most important charts going into the week. And I think I have some pretty interesting ones today. But before I get into that, I did want to let everybody know that at DecisionPoint.com, we are running a holiday special. And right now, you can get both of our reports, any of our reports, I should say, for 15% off. So you can get our bundle, which is both, for $68 a month instead of $80 a month. And of course, if you want to save even more, you can get an annual, and it's only $680 a year. So you're actually getting 2 free months with that. So go ahead and check us out. If you wanted to get one report, you can do that, and it's still 15% off. So decisionpoint.com, come check us out. If you like this kind of analysis, you're going to love our Decision Point alert. Let's first go ahead and look at the 5-month candlestick chart. And I generally start all of my reports off with this particular chart. Looks just like it every day, just about. And what I wanted to talk about, and what I've been talking about last week, as well as Carl, is that we have a rising wedge. And these are bearish patterns. And of course, the market has just been continuing up regardless of, all of the various things that are telling us that it shouldn't be continuing to go up. And as that has gone along, we've formed this rising wedge. And like I said, this is a bearish formation. And I have to say, here at Decision Point, a lot of us know that we tend to be a little bit more on the conservative or bearish side, if you will. But lately, we really haven't been, we've been pointing out some of the problems that are going on with our indicators. But overall, you really can't fight the trend, or in our case, what we talk about is the bias. And right now, there is a very, very strong bullish bias, and it is keeping that market from really having the big correction or even a big pullback at this point. But we are starting to get very extended here. Good news is our PMO is rising still, and you can see maybe it did accelerate just a little on the day. It's still trying to move a bit higher, and it's not, it's overbought for normal times, if you will, but given the volatile times we've been having this year and after the bear market, we've certainly seen more overbought readings than 2. But typically this indicator will move between 2 and -2. So I think everything is looking safe right now. We don't have to worry about a giant correction because that bullish bias is so strong. But in the short term, we do need to be thinking about this rising wedge. And of course, there are some other problem indicators out there. So we're not just looking good here in the short term. So I want to talk about our golden cross and our silver cross indexes. These are indicators that Carl came up with. They are exclusive to Decision Point, and StockCharts.com is who has the rights to actually use them in a chart. These are phenomenal indicators. So let me explain them very quickly. The golden cross is probably easy for most. A golden cross, of course, is that 50 crossing above the 200. So what we do is we take all of the components of the SPY and determine how many of them have a golden cross, how many are on a golden cross. And currently, we have just over 80% of the stocks in the S&P 500 with their 50-day EMA above their 200-day EMA. And, that's a great thing, and you want to see it rising. That tells you long-term strength, not to worry about a huge, giant bear market. But the problem is right now, at least with this golden cross, is it's starting to hit some overbought readings. And we're getting to territory we haven't seen since the bear market. And so that should keep us on our toes. But right now it is trying to accelerate upward. Silver Cross Index is how many of the S&P 500 members have their 20-day EMA above their 50-day EMA. We call that a silver cross if the 20 moves above its 50. Well, as you can see, we've got very overbought readings back here. And unlike the GCI, which is continuing higher, it is now turned over and we're going in for a negative crossover. So as of Friday, it had flattened out just a little bit, which is great. And we have a BPI that has really been staying above its signal line, even though it's been struggling a little bit here. It got really flat, and so we were wondering what might actually happen if this decline that we started to see was going to actually come to fruition into something bigger. And of course, with that bullish bias, it just hasn't done that. And as you can see, that silver cross turning over, but it is starting to decelerate. All right, let's go ahead and look at gold. It is the holiday season. Let's look at all the glitters. And gold is starting to really look good. And we've been talking about gold. I've been a little bit concerned about gold as to whether it would follow through on this bounce that we're seeing, or was this going to be sort of that last gasp before it turned back down again. But things are really lining up well for gold right now. The dollar, I don't have that chart with me here, but the dollar has been really suffering, and that's not going to help. That's not going to, well, it helps gold, but it doesn't help the dollar. So usually they travel, you can see the correlation here. Usually they have an almost perfect reverse correlation where, dollar goes down, gold goes up, and vice versa. But you can see it's been a very strange time after as we started November, that changed quite a bit, and they started to travel in concert with each other. And we're starting to see them pull apart again, and that's great, like I said, because the dollar is starting to look very weak. Starting to, it is weak right now. You can see the PMO is rising. We have very high discounts on the physical gold trust. And we track this because we consider it the sentiment piece of gold. And when you have very high discounts on gold, on the physical gold trust purchases, then you know that you have, it's bullish for gold. Bearish sentiment, bullish for gold. So right now, you can see on this chart, this is as of Friday, and it was really getting ready to have the fight of its life, if you will. It was getting ready to test that 20-day EMA as overhead resistance and this area of overhead resistance formed by that September low and the October low. So I was a bit concerned that we might not see it do that. The RSI was looking a little bit weak here. It was starting to tip over a bit. So I was concerned about that, but at this point, I happen to know the GLD chart has gold popping above the 20-day EMA and this area of overhead resistance. So gold is doing what we kind of expected after looking at the chart Friday. And I think that gold will continue to glitter into this holiday season. Another thing that sparkles, what else do we have? The sparkling gems would be the silver. iShares Silver Trust. Gold and silver haven't been traveling that closely together. They've been in on similar paths, but I wanted to look at silver because it's really lining up very nicely here as far as the indicators go. So it's really been doing nothing, let's face it, since September, mid-September. Silver has been a snoozer, if you will, but it's starting to come out. It gapped up here. This is SLV again, and we're seeing, as of Friday, I really like this one. It was, you can see right here, it was just starting to get above that 50-day EMA. It had already gotten above the 20. And so I was liking this. I presented this on an interview with Market Views TV that you should be able to find on Twitter. We had a PMO buy signal that had lined up. We also were getting an RSI that had just turned positive. So all of this looks great. Silver, I'm looking forward to at least come up here and test that area of overhead resistance at $24. It'll be tough because you can see there are a lot of touches, as we say, to that overhead resistance line. But I really like the way this PMO is lined up. And you can see we even have the OBV bottoms rising slightly here, whereas these bottoms were about even. So that's also good. Tells us that the volume is coming in on silver as well. So I like that one. And then let's just finish ourselves off here with the diamond of the week. I do the Decision Point Diamonds reports every week, and I give my readers 15 stock picks per week. And what I like to do is find my favorite and present that for my free audiences at the Decision Point Show, at the Your Daily Five, as well as any other interviews and chart watchers that I do. And so last week's on Friday, I had picked a biotech called Seagen, Sgen. Really like the setup on this chart. I even showed this one to my producer. She's interested now. So the setup's really nice here. Like I said, I presented it on Friday, and you can see, actually I did it on Thursday. It was my pick for diamonds on Thursday. So since Thursday, it didn't do great, but we can see that it has started to pop now. And overhead resistance is coming up in the form of this gap, more so than this top right here. Really looking for that gap to be covered. But you can see everything is lining up. RSI just went positive. The PMO, when I presented it on Thursday, had just given the crossover buy signal. So we're getting that follow through on what that scan was telling me on Thursday. So I like Seagen, and I hope all of you like it as well. Again, want to remind you that we do have that holiday special going on at decisionpoint.com. Please come check us out. 15% off all of our subscriptions through January 2nd. So check that out. And that was Your Daily Five. I am Erin Swenlin with decisionpoint.com. It's been my pleasure. Thanks for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.